Hey trader, Stephen Kwitzel here with thetradersplan.com. Here with our top ETFs video of the week. I'm recording this at the close on Thursday, May 19th. Let's look at the overall market. Then we're going to look at some top ETF setups of the week. Let's start with the S&P 500. So it's definitely been rough out there, and I keep talking about make sure that you're not getting sucked in every 2 to 3 day rally. Like, you get all these 2 to 3 day rallies that just continue to fail and continue to fail. And at least right now, kind of my litmus test to say, okay, should I be getting in something? Is it in a downtrend, or is this is it in a 2 to 3 day rally, or is it the start of a better rally? So right now you have the 8 day that's under the 20 day. So I've really been in cash for almost this whole move, just because it's just been in a nasty downtrend. So, the market is reversing a little bit on Thursday. Maybe we have a temporary bottom put in. Maybe we can really break above, I believe that is Tuesday's high, because we had a really, really rough day in the market on Wednesday. So, if we can break above Tuesday's high, that would be really, really nice, positive, and then maybe we can really get a dead cat bounce, or even a rally of 8-9% up into this 50-day moving average area. So that would really be my target. If we can move above the 20, I think we could at least bump up in this range up here. So let's look at the NASDAQ real quick. And this is definitely in rougher shape. The NASDAQ is, because tech stocks are getting hit, and when the market rallies, this is going to rally the strongest it is likely to, because it's the most beat up sector. It's the most aggressive sector. So again, if we can rally back above Tuesday's high, and then that 8 can move back above the 20, we could get, I think, a nice counter trend rally. And any rally that comes from it, I am going to look at it as a counter trend rally. And once the market or my stock or whatever it is I'm trading is moving above certain moving averages, I'm going to trail behind that moving average, just in case it rolls back over. I don't have a really, really wide stop. I'm really trailing pretty tight. Let's look at really what is in the top 10 for the week right here. We have a lot of the metals that are popping today, and something that's interesting that I want to talk about is some solar and some clean energy stocks. So you have this REMX, rare earth metal. This is popping above the 20-day moving average. That 8-day is about to cross. So again, once that 8-day crosses and it's trending above the 20-day moving average, what I would just do is, if you want to enter a trade, put a stop loss 1 to 2% behind that 20-day moving average. That way it can rally as long as it wants to, and if it rolls back over, you have a pretty tight stop behind it. So I think that would be a good way to go. What's been interesting to me, and something I noticed yesterday or on Wednesday, the market got hit very, very hard on Wednesday, but this solar ETF TAN was barely down, and it's actually kind of looking like it's putting in a bottom. And the reason I say that is because it's already above the 20-day moving average on a really, really bad day in the market on Wednesday. It was barely down, and that 8-day is about to cross. So if I were to go after an aggressive sector, an aggressive industry right now, this solar, this clean energy, that's where I would look, just based on how it's held up the last 2 to 3 days, and just where it's at right now. So, excuse me. So right now I'm potentially looking at this as a nice setup with a very, very tight stop. We're not talking about a stop loss way down here. I'm saying once it breaks the 20-day moving average, I am out. And that's the way I'm playing it. I just want it to ride the 20-day. If the 8 is above the 20-day, because you can see right here, we had a nice counter trend rally. The green line, the 8-day moved above the 20-day. You had a nice rally, and then it closed right here. If you kept some in, it closed again right here. You're out, and then the 8 moved under the 20, so you would have been out this whole time. So, I like stuff that can trend, and I like stuff that can trend either up or down. It doesn't matter to me, just because it helps me to be able to plan better versus something going sideways. And if this has a history of going down or going up or going down, when it's going back up, I can hop on that bandwagon and ride it as long as I potentially want to. Okay, so it's just kind of something to keep in mind. So right now, I really do like tan. I think that's looking pretty good. Now, I say this, tomorrow morning, if I send this out Friday morning, this could be getting slammed. You have absolutely got to take this day by day. You've got to be willing to change your opinion day by day, because this might look good right now. It might look good that if we have put a bottom in, maybe this is the industry that's going to rally the strongest. That could change in an hour. Okay, so you just kind of keep that in mind. I don't want to hear, but Steven said, no, none of that, right? I'm giving you some rules to follow. I'm giving you some aggressive industries that if the market rallies, could rally strong, but they could roll over as well. So tan is looking kind of interesting. You have, so a lot of the metals like copper, this rare earth metal, this is looking pretty interesting. And it's, below the 200-day moving average. So this is, in my opinion, not actionable. But if it really starts to rally and gets above some key lines, then I'm going to start to pay attention a little bit better. You have more confirmation this week that the clean energy ETFs, this ICLN, this is something I've traded plenty of times. This is now above the 20-day. That 8 is about 1 or 2 days away from catching up. So, and the reason why the 8 moving above the 20-day is that's a good entry, because usually what that means is the 20-day, the price is held the 20-day for about 2 to 3 trading days, right? So it's not like right here where it briefly moves above it and then gets slammed below it. It moves above it, it can hold it, and that 8-day will catch up. And then that's just kind of a nice little entry. There is no perfect entry right now, especially in these volatile times. PBW is something similar. So you have clean energy and metals that are at the top of the list. And here's another one that I thought was interesting right here, is this lithium battery ETF. This is another one. If I were to go aggressive, it would probably be in TAN and probably be in this LIT ETF, because the 8 just moved above the 20. It's starting to climb above the 50. It's in a nice downtrend. It's in a nice downtrend, close to breaking out. And I tell you what, the demand for lithium ion batteries, the demand outweighs the supply. There's only one active lithium mine right now in the U.S. I read that, but we have plenty of lithium in the U.S., but it's not being mined yet for some odd reason. Environmentalists. Anyways, so this right here, you got the 8 above the 20, and it's really leading this week. So again, right now, the way I look at everything is, instead of investing in utilities or something that might hold up when the market's getting slaughtered, I am more just probably rather sit in cash for a little bit and trade less and say, okay, when the market does rally or when the market does bounce, what seems to be leading, and I want to go aggressive there. As of the snapshot I'm seeing right now, today, Thursday at the close, May 19th, I'm looking at lithium batteries and I'm looking at tan solar. That could change by Friday morning, so we'll just kind of wait and see. So always have your stop losses. Always, have your plan, when to get in, when to get out, and make sure you execute that plan and don't get caught up in the heat of the battle. There is one more thing. There is a lot of silver miners and gold that is popping today, but the chart still looks like crap. So I would just absolutely avoid those right now. There is no trend in gold and silver. It is a ugly, ugly chart. Maybe it will rally, but it's just not ready. So I think there's better stuff out there. So I hope this was helpful. Be safe out there. Trade your plan, right, and just execute. And it's okay to trade a lot less, and it's okay not to trade at all until you get those signals. So have a blessed weekend.